Good afternoon, traders. This is Christian Farmer's Choppy Trade Group, and this is your end of day market recap for Monday, the 7th. Hey, did we finish positive today? No, we just barely didn't. Sorry, something just popped into my head. I think we were up three Mondays in a row. We almost got, we almost got there today. Sorry, I wasn't. Sometimes I'm in the middle of these videos and something pops into my head and I lose track of what I was going to talk about. But here's what I'm referring to, right? So today's obviously Monday, the 7th of April. SPY was down 0.2, almost came all the way back, which is a monumental overtaking. Finished down 0.2 of a percentage point. What I was referring to is the last 3 Mondays have been positive, so that breaks the streak just barely. 0.8%, 1.8%, and 0.7% today, just barely clips a move lower for the day. But what a huge range we traded in today. Risk disclaimer in front of you. Everything that I'm going through in this video is for information purposes only. Everything I'm talking about is for educational purposes. Please read the full risk disclaimer right there. So let's talk a little bit about that. The range today, so there you go. And I have this right in my spreadsheet, but like I said, sometimes I get sidetracked. Down 0.2 of a percentage point, but man, we came, from where the overnight markets were. I think we were down at one point like 4.5 or 5% was the lows between looking at S&P and the Qs. The Qs did finish positive for the day. So they continued with the streak, but S&P did not. IWM underperformed, but rallied about the same point from the open, about 3%. The micro caps, that's IWC, that was the biggest gainer in the major indices from the open, up 4% and finished down 0.5%. Very interesting regarding the equity moves, but also I thought what was interesting what happened in bonds today. Look at how much bonds were down today. 3% on the session. I'm going to review some of these charts. Also incredibly notable is where the VIX is right now, which did go up for the day, but it finished off 22% from the open today. We were, where were we this morning? Like almost around 60, I think, in the VIX. Yeah, 60 was like was where we topped out at this morning in the VIX. So it did reach a high of 60. What I think is, so where do I want to start? I've got so many different probably screens to show, but I would say I think what's notable is the VIX being as high as it is. And I'm going to talk about that first because I think it's important to talk about risk first. All right, so here's the VIX, which I'm going to start with first. So again, why am I starting off with this? Because I think it's important to understand like how fast the market is moving. And if you think like, or if you're not watching the VIX, and that's perfectly fine. Most traders or most investors are not watching what the VIX is doing every 5 minutes, which you probably shouldn't be. But I find it very interesting because I always talk about in these end of day videos about, my trading experience. And I just know once the VIX starts to crank up around, the upper 30s, that becomes very notable. And because this chart is we're going back here in this chart 30 years. This is a pretty long time. How many times has the VIX gone above, let's say 50, uh, in the last 30 years? And you can count on one hand, right? This was 2008 where we had plenty of days there where we were over 50, which was a very interesting time. Again, I traded through there. I've talked about that before. 2015, you had one day, and I believe this is one day. I'm looking at the weekly here, or excuse me, I'm looking at the monthly. 2020, you had that with the COVID situation where the VIX really spiked up high. You never had it in 2022. I remember, everybody in 2000, I don't want to say everybody, but there was a lot of people who kept telling me, Christian, you're not going to see this market bottom if the VIX doesn't get over 40. I'm waiting for the VIX to get over 40, and then I'm going to buy. And people were left out back in 2022 because the VIX never got that high. We had a number of readings that were between 30 and 40, but you never actually saw it crank higher. So again, why is that important? Why do I bring that up? Because the popular thought is often wrong. Sometimes everybody thinks one thing, because I had heard that time and time again in 2022 that the VIX has to get over 40 in order for capitulation, right? People were speaking of capitulation, which I talked about a lot in Friday's video. Everybody was saying that, oh, we never had capitulation in 2022. Well, you never actually got it. And the market reversed. So you don't always need it. So get that thought out of your head that if you think, oh my God, we got to see a bigger capitulation in order for for the markets to rebound. Well, you never got it in 2022. And last I checked, 2023 and 2024 were pretty darn good, going up around 24% both of those years. So now you do have that VIX over 50. And I'm not trying to make any conclusion about what that's telling us right now, other than the market is moving very fast and that there's a lot of volatility. For example, you could use the rule of 16, which people like to use for the VIX. And if you divide the VIX, by 50, and it closed at 45, or we could use 45, for example. And if you divide it by 16, you're going to get 2.8, which is basically telling you just the S&P, by the way, not anything else, but because that's all the VIX tracks, by the way, it tracks the S&P implied volatility. But in the S&P 500, that's now implying about a 2.8% move a day, which is an awful lot of volatility. So the reason why I start off with that is because, and if depends on what you are. So maybe some of you are watching this video and you're long-term investors. That's fine. I don't think you really need to make a lot of adjustments in that situation. In fact, if you're a long-term investor, you probably like this dip because it gives you a chance to dollar cost average at cheaper prices, right? Just like we saw in various times. And at the end of the day, well, I shouldn't say at the end of the day, but at some point, the market will be higher from now. And why do I make that general statement? Because that's how it's happened. That's how it's always occurred in the history of the U.S. stock market. There's corrections, there's dips, but at the end, the market always ends up higher. And again, you could go back to any particular time where there's been a 10, 20, 30% correction and the market always ends up higher. Now, maybe the world will eventually end and you won't have that phenomenon, but for now, that's what we know. So, long-term investor, you're probably liking this a lot. If you're a shorter term, like if you're more on the shorter term, and if you're a trader, you want to know how fast things are moving for you. Also, the other thing that we do know, we always talk about what we do know and what we don't know. When volatility does increase, what also happens with stocks, right? Well, correlations begin to move together, and many stocks are much more highly correlated than they normally are, right? So an increase in volatility usually indicates correlation increases, and a lot of stocks begin to move together. Now, for example, like you may have some stocks go up, go up or down 5%. Some stocks go up or down 6%, some 4%. But the point that I'm making is that there's a lot of them that there's not that much of a difference. And really, to me, I don't know, there's not that much of a difference between if something is up 6% for the day or up 5.5% for the day, right? I mean, it's you're almost splitting hairs a little bit with that. And so that means like stock selection isn't as important when there's high volatility and when correlation increases. I'm going to come back to that point in just a second, but I think it's important to understand what the VIX is telling you, because the adjustments that I make is I don't need the same size of positions that I usually carry when the VIX is around an 18 or 20 when the market's moving slower. So there's a lot of different things that you could do in this market. I want to talk about a couple other things under the hood before I get to the price action, because I think that, in terms of what I'm looking for at this point in this market is for things to be pretty washed out and like really, really oversold. This is another way to kind of slice it. I put this data out every day in my Substack. Please make sure that you're subscribed to that. If you're not, it's for free for the most part. It is ttgtrading.substack.com. Again, ttgtrading.substack.com. Of course, you could subscribe. It only costs $20 a month, and you could see what positions I'm taking as well as what the most important charts are of the day. And I've been including a lot of those. So please take a look at that. Please give it a shot. Maybe subscribe, try it for a month. If you don't like it, you could cancel, no obligation. Right? You do have to cancel it yourself, but there's no obligation outside of the month. All right. So what I'm referring, so look at this. So this is breadth for the day. Note that there was no 4-week, no names in the S&P 500 making a new high. To me, that is pretty washed out. When you don't see anything, right? And we talked about this, that in a bear market, there are no real hiding places. For example, what happened on Friday? Right? On Friday, all of the hiding places, the utilities, which were looking the best technically, they got smacked on Friday. And that's just how a bear market works. You can't think that in a bear market that you're going to hide out in something defensive. This is what happened. We talked about as well last week what happened with energy stocks, completely obliterated after, oops, get the wrong chart up here. There's XLE. XLE got completely smoked as well. But anything that was acting fairly well, even Mr. Buffett, which everybody was talking about, which actually was watching Mr. Buffett today, uh, the stock price. But look at what happened since it hit a high. Right? It was all the way up here at 537 in just a couple of days, from 52-week highs to testing its 200-day moving average all the way down here about 10% away. So that just goes to show you too that that there are no hiding places. And that's what happened with Bitcoin, right? I saw multiple people, and there's nothing wrong with this, by the way. I'm not criticizing anybody, but people were saying, "Oh, look at this Bitcoin. It's holding up pretty well." What's that telling us? It's not really telling you much in a bear market, because it will eventually go too. And it went down today 6.6%. It was down much more than that and actually came back nicely and held the 200-day moving average. I think that's interesting. But this was kind of the last, so far anyway, the last thing to go down, the last thing to get hit. And again, relative strength in a bear market can give mixed signals, right? Because it's just the fact that it's could just be later to fall. Right? You've heard this expression too, probably before, is that the market generals are the market generals are the last to go, right? And in this market, usually you think in previous, corrections, it's usually tech or something like an Amazon or Nvidia. But no, the market generals this time around were energy stocks and utility stocks. Those were your market leaders, believe it or not. Or, XLU was the best looking sector chart going into Friday. So in any event, that fell. And looking at the breadth, which is the point that I wanted to make, you've got nothing. You also have 83% of the S&P 500 today made a 4-week low. Is that so what I'm trying to the point that I'm trying to make, which is a long-winded point here, I apologize, but is that enough of a washout? Well, I'm not going to compare this with the S&P chart, but you can. I mean, you could look at it, I guess. Oh yeah, it does adjust this. But take a look, and this is not adjusted for today. There's a 1-day lag with this on Bloomberg. So you're seeing Fridays, which is 76% of the S&P made a 4-week low. Today it was worse. It was 83%. Take a look at the previous times where it's been really extreme, and it will adjust here in just a second. You could look, here's one down here, right? The market bounced from there. So, all of these things to me, like, I think we're pretty washed out. Here was back in 2022 where we had, that was also, and again, it wasn't perfect, but a rebound was coming. I think this point here was in September. And I think we ended up rebounding like right at the very end of October. So again, you kind of have to understand that there's a little bit of timing. Sometimes it's not right away, but it's forecasting that things get pretty washed out. And you could go back a little bit further. I think it's even more extreme in 2000. I have to go back a little bit further, but you could see, right? Like here was a cluster of, see if I can get this out of the way, right? That it was actually a bit worse. right? So again, we're at a pretty extreme point. I can't tell you if tomorrow that means things are going to rebound, but we're now like we're hitting a lot of boxes of a pretty extreme sell-off that we've got on our hands. Just bring up a couple other things here, and then we'll talk about what I made. So we talked about 4-week highs versus lows. I did not bring up before we get into any other charts. I'll bring up bonds. Again, look at the rejection at the top of the value area. So again, something else that was holding up strong gets absolutely smoked today. If you think you're going to hide out in bonds too, look at the volume that's going up in TLT. So I can't explain like some of this. There's a rumor out there that China was selling our bonds today. They have a big position, but clearly somebody was selling a lot of bonds today because that's a smackdown in TLT, down 3%. Huge, another huge move. Look at IEF, which is 7 to 10 years. Took out this VPOC up here, and that's a massive rejection. Let's look at what SHY did today. SHY is so very shorter term. This is 1 to 3 years. Flat today. So again, it does still look extended. Look at the volume that's happening in these treasury ETFs. Humongous amount of volume. A lot of volume back in here. We kind of sold off a little bit. Now we burned off those overbought levels and still went higher, but some very interesting things that are going on right now. Let's talk. So I mentioned that with this volatility, there's plenty to do in terms of day trading, given the overnight risk right now. You can take what this market is giving you, which is a lot of intraday volatility. I broke down how much percentage move that moves. Let's start to look at some of these index charts. SPY is almost completed the 80% rule. Now, I just want to use a little bit of a disclaimer here. My charts, I adjust them for dividends. Right? You'll find that if you don't adjust them for dividends, I don't have the answer, by the way, whether or not you should be adjusting your charts for dividends or whether you shouldn't. I kind of think of total return. By the way, look at the volume in SPY today. Woo. um, that's a lot of volume. Right? People were talking about that on Friday. But regardless, we have not yet completed the bearish 80% rule. If you look at, so it's a little bit of a mixed signal here. S&P futures have completed the 80% rule. If you don't adjust for dividends, you're going to find that SPY has already completed the 80% rule. I think that you should adjust for dividends, but that's a point that's up for debate. I don't really want to go too much more into that, but you're going to get a little bit of different results depending on what, if you're using the value areas. S&P futures, in my opinion, like and I adjust for contract changes here, has completed the bearish 80% rule. Let's go to the Qs. Let's see if look at the volume in the Qs today. Holy shnikes. Wow, again, people were posting how much volume traded on Friday. Does it mean anything? It means that there's a lot of volatility in the market, right? I've talked about before when people talk about, oh my God, this is record option volumes. There's a lot of volatility right now. I don't know I don't know if that's really going to give you any other conclusions that there's a lot of volatility right now. Hence, the VIX is at 45. People are going to trade at, just as I mentioned in the beginning of this video. Well, maybe I didn't make the conclusion yet, but you don't need to trade individual stocks when you have this much volatility if you're a day trader, right? You don't have to be so concerned with stock selection when the VIX is out of 45 because stocks are moving together. So that's also why you're seeing so much volume in the ETFs is because they are moving much faster, right? Traders can exploit volatility, right? Day traders love volatility, right? So the more volatility they get, the more that day traders are going to switch to trading ETFs, and they're in a very favorable environment. Let me get to the technical point here is that the Qs did complete the 80% rule, also took out a lower VPOC. So for me, like this is a place where I want to start buying. Do I need to do it right this second? Like everybody seems to be very much like on edge about trying to call the bottom in this market. Relax, take a deep breath. You don't have to call the absolute bottom. You're going to be okay if you don't. If you want to wait for a turn, I mean, we are deeply oversold here, so I think at the very least, you're going to get a check back to the 5-day moving average. I don't know if that's going to happen tomorrow. I don't know if it's going to happen sometime this week, because we've got a lot of events this week too. So this makes this market very, very difficult. We're obviously in a very headline-driven market. We're also going to get the CPI report that's going to come out on Wednesday. PPI report. For some reason, they're only looking for zero point 0.1. I don't know what happened there, but now they're only looking for 0.1 on this. PPI, they're looking for 0.2. Remember last month, like the last couple of months, they've been looking for a 0.3. All of a sudden, they're not looking for such a high inflation report anymore. Um, Also going to get things like the Fed minutes. We're also going to get Fed speakers, right? I was pretty adamant in Friday's video that I could not believe that the Fed speakers are not, more in tune with what's going on in the market, as Powell just seemed to be very relaxed. I would add too, when you look at CDS and or high yield credit spreads, things are moving pretty quickly. As I said on Friday, we're not at a level that is that concerning yet. I'm not a fixed income expert, but I know enough, I think, to kind of, get me. Oh, sorry, not enough to bring up the right chart, I guess. CDX, here's 5 years. Try this again. And let's hit chart on this. Sorry, but again, and you could see that this is ripped higher. Again, it helps to zoom out a little bit. But yeah, I mean, this is moving very quickly, right? And dramatically as well. So we've got a major move, I don't want to say a major move, but we've got a decent move in credit spreads as well as credit default swaps for high yield. So do I think that this is a good place? This has been my level in the Qs for 16. So what I'm doing right now is trying to take advantage of that by day trading. Also, I day traded some SPY today, and I left a little bit of a position on. Again, I'm not going to leave, a good portion on, because it's just not worth it right now holding into these overnight gaps. But I can leave a small starter position on, just something so that I know what I'm doing, and I've got a level to trade against. Qs, I've got a level to trade against, but it's very important to understand with anything, have a stop price where you may think that it's a good buying opportunity, but unless it's for the long term, want to have a stop price. So I think that for me, like, this is a great place to try along. But I'll have stop prices. If I put this, I did not put on a trade specifically in the Qs, but I think that this is a great place to watch, right? Also, another thing too that I wanted to mention was headlines, right? We got obviously some good headlines today, which were later said that they were false regarding a possible 90-day pause in the tariffs. But this was a humongous move. Also, note that we never closed above the value area for the day in these 5 minutes, but this was a huge move from the lows on this. So again, there's opportunities for day trading. There was also a couple negative headlines from China. Did the market break down on that? No. So it's important to observe what you're getting with these headlines, because those headlines do not bring us down any further. So perhaps this is getting somewhat priced into the market at this point. And that's the conclusion that I'm making. When you start to get bad news and the market doesn't go down on it anymore, it's somewhat priced into the market. IWM. I'm also thinking that this is getting very interesting. I've been very, very negative on small caps. However, we've taken out so much in terms of levels to the downside. This bounced all the way up to the bottom of the value area and got rejected. Do I think that we could get up there again, which is about a 5% move? It's possible. And I think that there's more of a chance that we go up here than, go down to this next VPOC down here. But again, that's my personal thought. Look at the volume here as well. Now, also what I'm trying to do is keep it simple. I'm not going all over the place looking at different names. To me, it's not the right time to do that, because again, everything is moving together. There'll be plenty of times to be a stock picker. So what do? I pick names that I haven't even, traded much this year, but bigger, more liquid names right now. Amazon, for instance, I talked about this name on Friday. I'm still holding a small position in Amazon. It's holding its bottom of value for the year, 165.55. It's also acting pretty well. It was up 2.5% today. Even Nvidia, which I've been very negative about for the last year, I haven't liked how this is traded at all. But you're at a point right now where you're at a major support level. That major support level held. Again, I'm not saying any of these names go back to 52-week highs, but I think for a bounce, you're they're set up for oversold bounces, and I think even more towards than what you saw today. For instance, like I think this could bounce all the way up to 111. I think that would be interesting. Berkshire, I think, is interesting as well. So normally for my watch list, I've got on about 15 names. Just going to hide this 1 second because this is momentum stuff that I don't even look at anymore. But I put 5 names on my watch list. And by the way, they did. I mean, look at Nvidia was up 11% from the open today. Amazon up 8%. So that's how again, I'm sharing things. I try to share some strategy with you in these videos. Hopefully, this is kind of just a little bit about what we go over at Tribeca Trade Group. You're welcome to kind of to give it a try and see what our chat room looks like during the day. But this is where I really try to add value and look at some of the best practices to say, okay, keep it simple when the market gets very complicated. All right, guys, that's it for tonight. Have a great rest of your evening and see you tomorrow.